A strange pattern hides in the shadows of financial history. Every time a powerful currency begins to crack, people quietly start hoarding the same thing. Gold, not stocks, not bonds, not paper promises. Gold, because when trust in money dies, gold is what survives. For most of modern history, the world has trusted one currency above all others, the US dollar. Oil is priced in it. Nations store it. Global trade moves through it like blood through arteries. But the dollar's dominance was never meant to last forever. And history shows that when powerful currencies begin to weaken, something ancient wakes up gold. The story begins in 1971. For decades after World War II, the dollar was tied directly to gold. Every $35 could be exchanged for 1 ounce of it. This system gave the world confidence. But behind the scenes, something dangerous was happening. America was printing more dollars than it had gold. Foreign governments began noticing the imbalance. They started converting their dollars into gold reserves. America's gold vaults began draining fast. On August 15, 1971, President Richard Nixon made a decision that changed global finance forever. He closed the gold window. The dollar was no longer backed by gold. For the first time in modern history, the world's reserve currency became pure paper, and almost immediately, gold reacted. In 1971, gold was about $35 an ounce. By 1980, during inflation and economic chaos, gold exploded to over $800, more than a 20x increase. Why? Because when trusted money weakens, investors run towards something that cannot be printed. Gold became a financial lifeboat, but the pattern doesn't stop there. Look at the 2008 financial crisis. Banks collapsed, markets froze, the global financial system nearly imploded. Confidence in paper assets evaporated overnight. Gold responded again. Between 2008 and 2011, gold surged from around $700 to nearly $1,900 an ounce. The same ancient reaction: fear rises, currencies shake, gold climbs. Now zoom out to today. The United States carries over $34 trillion in debt. More dollars exist in circulation than at any time in human history. Governments around the world are quietly preparing for something. Central banks, especially in China, Russia, and emerging economies, are buying massive amounts of gold, not selling, buying, and not in small quantities. In the past few years, central banks have been purchasing more gold than at any point since the Cold War. Why? Because they understand something most people don't. If the dollar ever loses its global dominance, the world will need a neutral store of value, a financial anchor, and gold has played that role for over 5,000 years. Empires have risen and collapsed, currencies have come and gone. The Roman denarius, the British pound's imperial dominance, the French livre, all powerful in their time, all eventually weakened, and during every collapse, gold remained silent, waiting. If the dollar were to collapse tomorrow, global markets would not simply disappear, but trust would fracture, banks could freeze, currencies could swing violently, and in moments like that, people return to the oldest form of money humanity has ever trusted: gold. Not because it is magical, but because it cannot be printed, it cannot be inflated away, it cannot be created with a keyboard inside a central bank. Gold is slow, heavy, unimpressive in daily life, but in moments when financial systems shake, it becomes the most desired metal on earth. The irony is almost unsettling. In an age of digital currencies, algorithmic trading, and trillion-dollar markets, the ultimate financial safe haven is still a lump of metal pulled from the ground. History has shown this again and again. When paper money weakens, gold remembers its power. And if the dollar ever truly collapses, the quiet vaults filled with gold may once again decide the future of global wealth.